Do you want 5 simple methods to save money on your tax return this year? Then this is the video for you. Alright, tip number 1 is a pretty simple one and you've probably heard it before, but keep all your records, especially of your deductions. So the simplest way to maximize your tax return is to claim everything you're eligible for, and to do that you need copies of your receipts for all your work-related expenses. Now there's great methods to do this. The ATO app is really good. It has a My Deductions section. You literally take a photo of the receipt, log the date, log what it's for, and done. And then you can export that at the end of the year, either send it to your accountant or upload it into your My Tax thing, and then your return's ready to go. So this is the easiest way to maximize your return. Keep those receipts. If it's tools, if it's fuel, if it's clothing, if you've got them all, you won't forget them come end of year. Now the other great thing about keeping all your receipts is that if you get an audit done on you, you've got it all there ready to go. So the ATO will potentially do a random audit on your return, but if you've got all the receipts there to back it up, then you've got nothing to stress about, compared to someone else that's lost the receipts, claiming for things they shouldn't be claiming, and then it comes to the end of the year and they've got nothing at all, and that's when you're potentially going to get in trouble through an audit. Alright, tip number 2 is something that some people think of, but then others, they're not really aware of how it works. So it's bringing forward expenses into June. So you want to try and get those last minute tax deductions done before the 30th of June. That way they'll be claimed in that year, and potentially if you lodge your return early in July, you're claiming that straight away and potentially maximising your refund straight away. So things like your uniform, if you need a new set of work-related uniform, buy it in July. Minor tools. So the only place where people get caught out here is that it's got to be under $300 to be deductible immediately. So it's no good going and buying that brand new computer for an individual tax return on the 30th of June, as it'll be depreciated from the purchase date. But if it's smaller office related stuff like a chair or something, or it's tools for work, or it's your uniform, or it's donations to charities, do those before the 30th of June and maximise them in the current year. Step 3 is a bit more of a complicated one, but it's selling your investments at the right time. Now this may not be applicable for everyone, but for those that own shares or property that are in a capital gains position, so that's where your sale price less your purchase price is going to leave you with a profit, is that you need to really think about when you're going to sell these assets. Now if you're earning the same amount year to year, it may not matter too much overall for tax wise, but if someone that's got a fluctuating income, it can make a real big difference as to whether they sell on the 30th of June or the 1st of July. So the sale date will be the date that you recognise that capital gains. So you may defer that sale of shares from, oh, I'm thinking about selling and it's late June. Oh, look, maybe if I just push that back and sell that in July, you're deferring any potential tax on that for 12 months. Now you may be in the opposite situation where it may be better to bring that forward and sell it in June, as you may be expecting a higher income the next year. This is something you should speak to your accountant about, but it is definitely a real big way to save tax, especially on a big sale of property. You could be talking hundreds of thousands of dollars of profit, and it's really important to sell that in a year that may be the most beneficial for you. Tip number 4 is something a lot of people forget, but remember to keep track of work-related use of your car. Quite often, people will be required to use their own car for work-related purposes at some stage through the year. Now this might be only one small trip, or it could be weekly trips, but it all adds up. If it might be 10Ks a week that you're doing for one job to go out and see a particular client that you have to use your own car, you don't get reimbursed, you don't get a work car, but people go, oh, I just won't worry about it. But that adds up to potentially 480 kilometers a year if you're working 48 weeks of the year. So just remember, there's a few different methods for car related. There's a logbook method, which is a bit more complex, but there is the cents per kilometer method, which doesn't require you to keep all your receipts. Now you have to keep records of how you've calculated the work-related kilometers, so this might be a diary or something like that, but it is quite a simple method that you can do at the end of the year, go, oh yeah, this is what I've done through the year, and it gets you a decent little claim there. Now this is limited to 5,000 kilometers a year, so if you're doing more than that, you might need to consider whether the logbook method is better for you, but this is quite a simple method that a lot of people forget, but it can quickly add up to a decent claim. Now tip number 5 might not necessarily be a tax savings tip, because it's don't spend money just to save tax. Now look, that might go against the whole concept of this video, but there's no point going and spending $100 just to save yourself $30 in tax. So the average tax rate is in that 34 cents-ish, but a lot of people go, oh yeah, but I can claim a tax deduction if I spend on that. But if you weren't going to spend on it, you might have saved yourself, for instance, $34 in tax, but you've spent $100. So you're still going to be $66 out of pocket. So yes, if it's necessary, it's work related, then go ahead and purchase it. But if you're purely purchasing it and you don't really need it, you're going to be in a worse off position overall. So just be clever with what you're purchasing and don't waste money just to save tax. Alright, as you can see, that's 5 really simple tips on how you can maximize your tax return. They're not necessarily anything complex, and the everyday person can do them. It's keeping your records, it's being smart with when you spend your money, when you sell your assets, it's making sure that you're aware of things like car expenses, and it's not wasting money when you don't need to. Thanks heaps for watching this video. I really hope it's been beneficial for you. I'll be doing more tax related videos going forward about some more in-depth strategies that might be applicable to you. As always, I'd love to see you give the video a like, leave a comment, and most of all, I really appreciate anyone that subscribes to the channel. Thank you, and talk to you soon.